Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the Treasury Update podcast, host Craig Jeffery sits down with Gunita Bindra, Vice President of Product Management and Partnerships at Bottomline Technologies, to examine the 2021 Business-to-Business Payment Survey results. Topics of discussion center around shifting technologies, unique tactics, and leading practices used by organizations across the payments landscape. Listen in to find out what corporations and banks are doing to optimize processes and maximize efficiency in the world of finance.
Welcome to the podcast, Gunita.
Thank you, Craig. Happy to be here.
Yeah, I know we're going to be spending a little bit of time talking about B2B payments, some of which will cover survey results, but I wanted to go through just a couple of these. And Bottomline's been gracious enough to underwrite this survey for multiple years, and we get over 300 respondents, 300 corporate respondents, and a number of bank respondents as well. 40% of the respondents operate in 6 or more countries, and almost a quarter operate in 21 or more countries. So there's a significant amount of complexity. And well over half, 57% of those taking the survey originate payments with 3 or more banks. So there's certainly a level of complexity in this arena of B2B payments that many companies are facing. So we'll get into that. But just for those who are listening, who are looking to download the report or understand a little bit more about what was covered, the survey covers drivers, complexity, like some of the complexity elements we talked about, plans to spend, compliance, new technology. We'll look at identifying trends over time from year to year, as well as within an individual year. And in our discussion, we'll look at, have trends accelerated or declined? What are the implications? What's emerging? What's planned or underway? So with that, Gunita, I wanted to start talking about the environment of B2B payments. And if you think about your client conversations and really what you're seeing in the market, because you live in the B2B payment space all the time, what are some of the bigger themes that you're seeing across B2B payments, across this entire space?
Great question, Craig. So what I've seen is trends that have continued for years, last couple of years, right? So trends like continued focus on electronic payment types like virtual card or ACH. What I've also seen continue is, focus on newer and faster payment types like RTP so that folks can take advantage of early payment discounts. But you know what? Something interesting, which is the newer trend that I'm seeing, is a lot of focus on security and fraud. So a lot of my client conversations that were previously very, it's still very automation driven and very, sometimes rebate driven too. But now the conversations are moving to like, hey, your solution, what kind of security and risk mitigation processes and policies does it imply, right? We're also seeing, in terms of newer trends, or you could call it continued trends, is, integration across all the systems. So if you look at the financial operations, you're not just bringing money in, it's money going out, and there's a lot of money management. So how do we bring all these 3 different software systems to talk to each other? And then most importantly, have them talk to the accounting system and the banking systems, right? And the third one that, I think we'll continue to see is vendor experience for our buyers is top of mind. The questions like, hey, what does my vendor's experience look like when they receive a payment through Bottomline or PayModex? So I think those are some of the experiences top of mind for our clients that I think are a bit newer than, last couple of years.
Yeah. Now, some of what you said was certainly to be expected, like on the electronic side, ACH, virtual card, et cetera. You said something on the newer payment types, some of the faster payment types like RTP. And you said something I didn't expect. You said they're using that because of early pay discounts. That was interesting. Can you elaborate on that a little bit?
Let me give you an example. Recently, I was talking to a customer, and PayModex has launched international payment capabilities. And we were having the conversation of how do we implement the client on international payments. And one of the pain point the client mentioned was their suppliers were based in Canada and they were paying their suppliers on check. And she told me, like, Gunita, I'd love to pay the client or pay the supplier through an electronic payment method such as EFT so that they can take the advantage of, early payment discounts. And with check and the mailing times and, what we've all seen through the pandemic, it only makes sense to, put in place payment types that deliver the payments faster, right? So that our buyers can actually take the advantage of early payment discounts from their suppliers.
Your comments about integration, I know we're going to get into a little bit more of the integration, this end-to-end view, not just within an organization, but across organizations. And I know as a payments professional, you've got a lot to say on that. So we'll pull up a little bit more on that. The next part that I just wanted to hear some of your thoughts on, but I'll give you a little bit of a runway as to what we saw in the survey and the discussion about new technology and priorities that differ between banks and corporate treasury groups, corporate AP groups. Now, our surveys are long. Everyone knows that takes them, but it contains a lot of information. We can compare views on things from the banks to corporates. And, as a tech provider, I know you like that. But as we looked at the ranking on the impact on payments, we saw a different order or different set of priorities between corporate and bank respondents. So the bank order of some of the new tech was APIs, mobile, artificial intelligence, RPA. The corporate order was APIs, AI, and mobile. So artificial intelligence and mobile switch places. Corporates viewed that as more important than mobile. And so, as you look at this, what are your expectations here? What do you make of the difference?
Yeah, sure. So, Craig, firstly, it's interesting to see, API is still top of the list. And, why that is I think because both bank and the corporates want to make sure that any system they're implementing has cutting edge API technology so that it can connect to the various systems that they have in place in their infrastructure. So I think I'm really glad to see that that's top of the list. And in my opinion, I think, Craig, the mobile listed below artificial intelligence for corporates is because firstly, the definition of AI is very different for each, right? So it really depends on how you perceive what artificial intelligence is. Secondly, if I am to say what the corporate is thinking, I think they want a lot more personalization and intelligence in the systems they use. And I think that's why they've ranked it higher than mobile, because when it comes to the mobile usage and accounts payable, as much as it's great to use it for workflow like approve a payment, approve an invoice, manage exceptions through your phone, it's still nice to look at the end-to-end KPIs for your AP and AR using your desktop, right? So a cloud-based system, you can even access it from your phone's browser. So I think the corporate really valued AI because of the need that they have in terms of personalization and making the software more intelligent to solve their problems, such as, in invoice automation, we see the capture rates, right? How can, we make sure that the capture technology that we're embedding has machine learning and artificial intelligence embedded in it so that the system doesn't have to there's no manual work involved, basically. So I think that's my take on why probably AI was ranked higher than mobile. And from bank's perspective, I think mobile is higher because it's table stakes, right? For banks to really offer technology that should have a mobile app, right? So I think it's table stakes from their perspective.
Yeah, Gunita, as we've looked at this over time, APIs and view of its importance for banks has started off being quite a bit higher than on the corporate side, and the corporate side appears to catch up. And I always wonder, and maybe you have thoughts on this too, is if you're if you're a bank serving corporate customers and you're trying to address customers who are advanced, who are followers, fast followers to slow followers, you still need to offer some of the better services. So you can't just say, we're going to go to the average. You have to be a little bit earlier on some of these developments, whereas, it might be a small percentage who are leaders on the corporate side who were interested in APIs. Well, now it's massively important on the corporate side. Is that what you see too?
Yeah, spot on. Yeah, absolutely. I echo exactly what you said. Well said.
And it also seems like, payment professionals, whether they're in AP, procurement, treasury, they're a practical bunch. It seems that, the APIs make the connections easier. Robotic process automation helps. Artificial intelligence or machine learning can help with some of those things you talked about, whether it's catching fraud or just, managing priority. So.
Yeah, we use, I think we use RPA, robotic process automation, in making those manual payments, right? So there's a lot of portal payments, your utility payments, your telecom payments. You have to log into a portal and actually make those payments, right? So I think technology like RPA can really help and fast track that payment process, which today is very manual.
Yeah. Now, you mentioned a lot of conversations you have with clients has to do with integration, an end-to-end view or more efficient, or looking at your suppliers, experience. We've described it or heard it described as one company's payables is another company's receivables. This broader end-to-end view is truly a multi-year trend where more people are looking outside their silo or even beyond their company. As we talked about just prepping for this podcast, you use the phrase integrated payments and cash lifecycle management. Maybe you could tell us what do you mean by that, and maybe we can expand on that as we talk about the survey. But what is payments and cash lifecycle management?
Great question, Craig. So, when we started down this journey of really researching our customer base, we started to see there's a lot of systems that our financial operations department really needs to deal with. So there's AP requirements, there's AR requirements, and then there's treasury requirements too in the enterprise market, right? So one of the things we started to see was like, how do we bring all of this together? Right? Because if you look at it, AP and AR need to work together to solve some common problems. And you might ask, Gunita, what are those common problems, right? So some of the common problems we see is like efficiency. Both AP and AR departments require more efficient, more smarter systems, right? I think the other common problem is both departments can equally be victims of fraud, right? So having a software that is making sure that their payments going in or coming out are secure, right? So I feel like there was a lot of opportunity we saw in bringing these systems together. Now, a customer can choose to just use the AP side of it, or just the AR side of it, or just the treasury capabilities we have to offer. But I think having it all together, going back to the concept of embedded fintech, we're seeing we connect, like on the AP side, Craig, we actually have embedded our payment system into a couple of the ERPs. So the clients actually don't have to log out of the ERP. They can actually just seamlessly manage payments within the ERP. So, offering that one-stop shop, the ability to really embed your system in any system of choice for our customers has been top of our minds. And that's where, this concept of payments, cash lifecycle management comes to be.
That seems interesting in several ways. This idea, or the term you used was embedded fintech, where capabilities or the connections are, almost transparent to the user of whatever payment system, whether it was ERP in your example, a treasury platform, a payment hub, what have you, that it's using, open banking, open treasury, open APIs, for example, to embed and leverage that behind the scenes. Do you see that as being driven more by leaders in the payment space, technologists, or fintech providers of these types of services, or even banks?
So what we're seeing is, I think it's fintech and leaders in this space where, they're seeing 3 to 4 years ahead what's coming up, right? So I think it is the leaders and the fintechs really thinking, how can we work together? Even if, for example, Bottomline offers both AP, AR, and treasury management capabilities, but we also partner with systems outside of Bottomline. So recently we made an announcement, we partnered with Billtrust, right? That's another payment network. Bottomline's PayModeX is also a payment network. So how do we bring two networks together and really take advantage of each other's distinct competencies, right? So I think we're going to see a lot of that coming in where, we see a lot of payment networks coming together and partnering for the benefit of both buyer and supplier side.
This is not a commercial for the payment networks or really, I know, but I did have a question about that partnering in that front. I mean, the value of a network is, how big is the network? What can you do on the network? And you said there's sort of a synergy that comes together. What are the types of synergies when networks connect to networks? I would think there would be a bit of a fight to say, I want to keep my network separate.
Yes, a great question. So I think the way we've partnered is to leverage each other's strength, right? So one of the payment networks may be great at having virtual card vendors in their network, right? And one of our goals is to make sure we're providing best opportunity to our buyers when it comes to rebate opportunities, right? And also when it comes to vendors, when it comes to the vendor, they're receiving payments from different AP solutions. How do we make it easy for them to receive their payments? So keeping that pain top of mind, we're leveraging, the other network to make sure we're delivering payments to the supplier in the way the supplier wants to receive the payment, because that supplier has chosen to join the other network.
That does make sense. It always seems like, connecting networks to networks would make sense in one area, but there's also the battle of you want to be the network. And I don't think there's ever a situation where there's the network. It's kind of this open banking, open treasury, open payments is interoperability is a stronger play than anything alone. And, you're describing that, I think, brings that point home, though our natural tendency is not to go there.
Yeah. I mean, I think of this as, co-opetition. So competitions coexisting together for the benefit of the market, the customers and the buyers and the suppliers. I mean, PayModeX in itself is the largest electronic payments network with 450,000 suppliers in our network, all receiving electronic payments through us. So I think it's only an opportunity to partner with other networks, and other networks use our capabilities to pay the suppliers in the way they want to be paid.
As we move from networks to this payables and receivables side, you think about, you're buying something, you have to pay for it, someone has a receivable. There's this whole cash conversion cycle, using up working capital. Treasury, which is a core area we focus on and love, is, optimizing the use of cash across the board and managing working capital, whether it's driven by the experts on the receivable side or the payable side. I wanted to get on the comment you made about how can AR and AP be friends. So what's important to each of those areas can be different. It's if I'm in a power position of AP, I pay you when I want, and I send it in whatever format I want. But that boomerangs back to me in AP, to Treasury. Maybe you could talk about what does that life cycle look like from a visibility perspective, or being friends, working together? What are some of the issues that come up from that?
So I think, Craig, when it comes to AP and AR working together, is they have to work in, synchronization is how I think about it. And I think there has to be a lot of communication between the two departments, right? So AR could need, some invoice level details or some details that they may not have in order to reconcile a payment, right? So how do we make it so easy for them to communicate with the buyer very quickly so that they can in real time, read the remittance details and apply cash, right? When it comes to AP, how do we, again, communication, how do we make it so easy for the buyers to connect with their suppliers? How do they get the W-9 information very quickly? How do they get, additional documents that they need in order to pay an invoice, right? So that there's no time that is wasted in emails back and forth or phone calls, or just make it more automated is where I see great opportunity between AP and AR departments. There was one vendor, actually, Craig, I was talking to, pretty big in the industry, and they were telling me that they'd love to, what happens is that post the due date, right, they get a dispute on the invoice, and they actually the dispute has occurred days before when they actually receive it. And how do we make it so easy for the suppliers to get that dispute to hit their dispute management system, there as in the supplier's dispute management system, so that they have the time to mitigate the dispute and get the payment on time? So it's all about the timing and how do we automate the information when the buyers and suppliers need it and where they need it.
That's a rich set of issues that creates challenges. I think the other side, or some of the other ones, with your view of the payments and cash lifecycle management, is when am I going to get paid? How do I know and plan for that? How do I forecast it as I work my capital? I think of all these situations of, and maybe you can talk to this, is what creates an ineffective process? Well, defects. And what drives defects? Manual processes, broken processes, lack of information. So if I send a payment out and I don't send the details with it, well, it's great. They have to solve it. Well, no, they can't solve it, and so they have to call me. And now I have a broken process. They have a broken process, and you gave a bunch of examples. But in terms of this end-to-end view, are there any other examples there that come to mind about helping the other part out, or being friends, if you will?
I think of, fraud and security as one other area that I'd like to talk about. Now, how does the AP department know that they're paying the right vendor? How do they know they have the right bank account information? How do they know they have not been impersonated and have gotten inaccurate banking details of a vendor, right? So I think that's, again, an area where a middleman, like I call, ourselves in technology, that can sit between the two systems and help resolve some of these issues and inefficiencies and bring peace of mind to both parties, that you're getting the payment, the amount you actually paid for, and in a secure way. And then, of course, Craig, that's why, AP automation, AR automation systems exist to really mitigate this exact problem.
Yeah, so things like validation, master record management, all of these reduce the points of inefficiency, which also, as you're talking about, sound like points of opportunities for fraud or errors.
Absolutely, yeah. 79% of organizations were, based on a survey we did, were victims of fraud last year. That's huge. That is just amazing.
Yeah, and it continues to be accelerated and elevated. I think the criminals are spending a lot of time on their technology sessions as well to be more effective in criminalizing, stealing, and lifting data. We covered some of the core things that we wanted to talk about, but I also want to give you an opportunity on if there's anything else on the cash lifecycle management that you thought would be useful as we looked at the survey results. We talked through the environment. Anything else, from a mindset that we should be thinking of on the cash life cash lifecycle management or payments and cash lifecycle management. I keep dropping off payments, so I apologize.
Payments is key here. So no, I think we've covered it in our session today, and I look forward to the main session coming up here. But I will just say, there's two key levers in managing your, cash. It's AP and your AR. And how do you get visibility into areas where there's inefficiencies, both in AP and AR, so you can manage your cash better. So there's systems out there that manage your money coming in, money going out, and really truly managing the money when it's coming in and out. So that's all.
Excellent. Thank you. And in the show notes, you'll see a link to the webinar and to the results of the survey. So please take advantage of those and hear more from Gunita. Thank you so much, Gunita.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.